All right, hello and welcome back to Stock Market Weekly, your favorite YouTube series covering all things financial markets. I'm your host, Evan Medeiros. We're publishing every single Friday. Make sure you do subscribe to our channel. Check back in on the weekend so you're always prepared for the week ahead. Before we get into today's content, sponsor of the show, IBD, Investors Business Daily. They've been a longtime sponsor of our content. Thank you to them. Market Surge is a charting platform. I've been using it for years. Rich in fundamental data, has some trade ideas associated with it. Really kind of a one-stop shop for researching companies, starting some due diligence. Check out the introductory offer we've got for you, TradeRisk subscribers, in the description of this show or the link you see right on screen here. Thanks, IBD, for sponsoring this episode. Now, let's get into the headlines. There's two big catalysts that the market is chewing on right now. And from a high level, both of these catalysts seem to get more cloudy or uncertain this week. Okay, so the first is, of course, the Middle East, Israel-Iran situation. We talked about it last week. I've got a chart of oil up here because, when we look at this market, when we look at, the market's affected by what's going on over in the Middle East, most things suffer if tensions escalate or if the situation escalates, but not oil, right? This is kind of the leading beneficiary here, sadly, if things progress. Take a look at the volume that stepped in here on oil. Bigger, longer term chart shows oil basically flat for the past couple of years, but there's definitely a good surge and pocket of breakout momentum happening right now. So this is going to be closely associated with what's happening in Iran and whether or not the U.S. starts to get involved and Russia's interest in the situation as well. Closely tied to that, XLE, so this is the energy sector here. Again, big pickup in volume recently, still stuck kind of lackluster in a sideways range, but starting to get a little bit of momentum here. This is kind of, certainly related to the geopolitical tensions. Now, that coupled with the Fed, which we had out this week on Wednesday, giving their June meeting and really putting, again, a lot of uncertainty into the mix here in this market. They are very much interested in kind of sitting patient, sitting on the hands, doing nothing, waiting for more data, and waiting to see how all of the tariffs and those implications start to hit the economy here. So when we look at Fed expectations, you can see that going into next July now, we've got pretty much an 85% chance that the market's pricing in that the Fed does nothing, that we still remain same tight kind of 4.25% interest rates. And there's a growing number of folks on the Fed that are basically saying, hey, you know what? It doesn't seem like we should be raising rates at all. Lowering rates at all this year. So the market is got two of these kind of macro heavy weights on its shoulder right now. Potential war situation overseas, and then the domestic sort of Federal Reserve and interest rates kind of staying tight on this economy. So, despite those two things, markets actually held in there pretty well this week. It was a OPEX week, quarterly expirations as well. Russell 2000 was the standout this week, up in the green. Everything else, though, was flat to down, but just marginally so. So it was kind of a digestion, a little bit of a losing of some of that momentum, though, as we start to see some of the cracks right now in the technical picture here. If we go to the S&P 500, you can see, we started the week off at the highs and then basically, grinded lower throughout the week. And when we look here at our price action of a 3-month view, again, things are getting a little bit heavy, a little bit messy. We're starting to break those longer term trends. So again, there's some lethargic action here, and it's probably, in my eyes, warranted, just given the uncertainties that the market is dealing with. And in fact, one could make the case that it's holding up pretty damn well, given the fact that, there's a war situation involving a lot of parties now, and we still have fairly restrictive interest rate, for the overall economy. If we take a look at the VIX now, you can see that we are back above 20. So we started the week again at the lows, kind of the opposite. Didn't quite close at the highs, but going out around 20.59. And again, you can see kind of finding a little bit of a pop off of the recent 17 or so levels that we had. And this is something now where there's a little more fear in the market, which again, I think is a good thing, a healthy thing, a warranted thing, all things being equal. United States dollar here, index, you can see again, trying to firm up a little bit, trying to find some support where it did in early April, maybe a little double bottom action here, kind of breaking this downtrend. So let's keep an eye on this. If the dollar can actually strengthen, it's been very tough to get a sustained reaction to the upside for pretty much, all of this year, let's call it. 10-year treasury yield was lower this week. So again, I guess you get a little bit of savings here. So moving below that big 4.5% level, down around 4.38, cooling off a little bit. Again, it's still in, generally speaking, a higher highs situation or higher lows situation for the past few months. So let's keep an eye on this, but pretty range bound in the short term, but cooling off this week. Now, sector performance this week, energy was the top, financials were strong, and technology. So again, that's kind of why, markets held in there. There's a pretty powerful bunch when you start to get financials and technology working, throw in energy. I mean, that's a smaller sector. Healthcare took it pretty hard this week. There were some sector or some stock specifics there. Materials and utilities were the three worst performers. Now, this is where things get interesting. When we start to look underneath the hood, so this is our smart trend filter indicator. This starts to measure price volume, price action relationships spanning across time. It's a good indication of path of least resistance, who's winning the tug of war on these various time frames. So when we look here, when we think about our smart trend filter across the sectors, we've had basically bullish unanimous uptrends across the board since, the low, quickly off of the lows from April. Now things are changing. Now we only have two sectors that are in a bullish state right now on the daily time frame, and that's technology and that's energy. These are the only sectors that we sort of have a bullish, clean outlook to the upside here. If we go to the neutral state, this is where things just get messier. They're not full outright bearish yet. They're just choppy. They're indecisive. They're showing some, mixed signals here. And this is where most of the sectors are right now, including financials, even though they had a good week, are still neutral here. Healthcare, industrials, materials, utilities, real estate, communication services, all kind of bouncing around this, kind of sideways indecisive state. And then we have two clear sectors in a bear state here. That's consumer staples. That's consumer discretionary. Those are usually going opposite, but they're kind of lumped in here as the underperformers. So for the first kind of change in 2 months or so, stock selection is starting to matter a little bit more. There's pockets of momentum. There are things that are working. There are things that aren't working. And it's not just an index level kind of concentration. I think, as stock pickers, as traders, this does still, give us opportunity to start to comb through some of the various sectors and individual stocks. Now, if we go under the hood even further, again, 52-week highs and lows, we're still seeing pretty subdued readings. So we're talking about, highs of 80 or 60 stocks making 52-week highs or lows across the NYSE. Those are pretty small numbers, but you do see a little bit of a flare up here in the number of stocks hitting 52-week lows this week. We actually had some days where we were outpacing more stocks making 52-week lows than there were stocks making 52-week highs. So this is something we want to keep an eye on. Again, pretty low levels right now, so I'm not going to be too overly worried about it, but it's just kind of still a wait and see situation the way I look at it. Percentage of stocks above a 20 SMA, not much to say. Put to call ratio spiking. So this is interesting. I didn't get a chance to actually look into this. This could have been just with the holiday on Thursday. So again, this is data that's delayed by 1 day here. So this is not Friday's data. So we could have just had a little bit of protection just because markets were closed on Thursday, kind of an unusual midweek holiday. So there could have just been a little bit of extra protection. And then, with the big OPEXs coming out this week, could have just been some things with that. But nice spike there. We'll see how that shapes up on Friday. Bitcoin here, 3-month chart. Our call last week, pretty much the same this week. We said Bitcoin's likely to just consolidate. There wasn't too much signal here in terms of trending action. Our, outlook was basically expect chop, and it's still doing that. I still expect chop. It seems like it wants to come kind of probe some of these lower bounds down here. So let's see if it can hold this 101, 102 area where we got down to in early June. If it can successfully hold there, then, chances are we bounce back up into the middle of this range. Gold, I've been highlighting this every week for good reason. It's one of the best performing markets there is. I still like it. I still think it's actionable. I still think we have potentially continuation later this year. It is still chopping around. We had a nice attempt at a kind of a breakout here early this week, but then we kind of got faded out, or I guess this was Friday, and we kind of drifted lower. But, generally speaking here, it's still trying to hold up. I mean, we're not seeing any significant breakdown. Yes, we could kind of come back in and fill in some more of this range, but overall, I still like GLD. Couple of individual stock stories this week. We did talk about the Circle IPO last week. Well, Coinbase and some of the legislation moving through the Genius Act, starting to clear through some votes. It's not out of the woods yet, but we saw some nice traction here and some of the high hurdles being achieved for stablecoin legislation making it through. And so Coinbase, this and some other products that they are releasing seems to be at the forefront of benefiting here. And of course, so again, just a nice clean chart with Coinbase. Looks actionable, looks like a fresh breakout. Looks like this has a little bit of sustained move that could run here for Coinbase. And then Circle. So Circle IPO'd, and this IPO'd, I think, 2 weeks ago. And you can see we've got 194% return since its IPO. So pretty remarkable, hell of a good timing. They clearly were, savvy and tuned in to get this to the secondary markets and IPO'd in time for this stablecoin legislation. And, clearly benefiting. I wouldn't be chasing it necessarily as much of a bull as I am on lots of these stocks. This gets a little frothy here, but, it's momentum driven and it's working right now. So next week, I think, this got cut off. All right. So I got to fix that for next time. I think PCE is probably going to be one of the big ones. This is certainly the Fed's favorite inflation metric. And I believe that's Friday to get cut off here because it is a busy week of econ data coming out. Got some jobless claims and some GDP data coming out as well. But keep an eye on Friday's action. I think that'll be an important read, or at least a little bit of an excuse for the market to make some moves, depending on how PCE comes in on Friday. So with that, we're going to take a break here. Prepared slides done. I want to show you a couple of stocks, and then we're going to take it over to the price action. All right, so here we go. We've got TC2000 open. I want to just cover a little bit of the price action, just the big levels I'd be paying attention to on the major indices, and then I want to look at a few trade ideas heading into the weekend. So for the S&P 500, this is a weekly chart now, and you can see that we've had 2 weeks where we basically stalled out. We saw sellers come in above this, call it 604 area in the SPY, and you can see now that we did take out last week's lows. And so, if you want to be half kind of optimistic, half glass full here, you're saying, well, this is some good long overdue digestion. We just came off of a 25% rally off of the lows, and now a little bit of some sideways digestion here makes sense. And you could certainly make that case. It's not unreasonable to make, but if we go down to the daily chart here, things just are getting a little more sloppy. So, we've broken multiple trend lines, I guess, depending on how you want to kind of draw your trend lines or extend them from the lows. Last week you could say that we started to break down, and then you could start looking at some of these more, recent trend lines, and we're starting to break that slope here as well. And, generally I'm a fan of just the horizontal levels and looking at prior peaks and resistance areas. And you can see kind of the peak here from May, we're starting to challenge and undercut a little bit. And again, you can just see all of the trading that has gone sideways and is now starting to roll a little bit. So I would say that risk is opening up a little bit here. And like we talked about at the top of the show, there are some macro overlays that are kind of weighing on this market. So I think the market is really sort of chewing on that to see how those progress. And if we can get any clarity, Middle East, Fed, tariffs, trade war, all these things, right, that the market is now thinking about or digesting. And so depending on how some of those resolve, I think will be your immediate answer as to how the price action, either rolls over or firms up, right? But clearly you've got a sideways range. We're starting to break some short-term levels. We're losing some momentum. The indices feel a bit tired, a bit heavy. Doesn't mean we have to just roll over and cascade to lows. It just might mean that we come back down to, say, the May pivot low here around 575 in the S&P 500. That would approximately be another 3% lower. We didn't really fully fill this gap back from May the 12th. So maybe we have a 4% pullback here in the S&P 500. We find some support. We move sideways. It's summertime. It's sleepy. The catalysts are a little, kind of kicking the can down and making us range bound and oscillate. So this all kind of lines up with perhaps maybe a choppy session here. What negates that? I would say a breakout above 603, 604. If we can start clearing above this, if we can get a nice kind of a volume push back up, then, maybe this trend is saved and we can make it to our original anticipated target, which we did think we would get to, is the all-time highs. We figured the market was kind of, destined to get back up here. We're not necessarily changing that call, but it might just mean that the market has a few more stops to make, going sideways, maybe another higher low, maybe another shakeout before it eventually gets back up to these prior highs. That's kind of how we're thinking about it right now. Perhaps the probabilities of getting up here have reduced a little bit, right? Maybe there is a scenario opening up where we are kind of topping out here on a more intermediate, longer term, perspective. But right now, there's still just, a wide range of outcomes, I think, that this market could take. And for now, we're going to take it 1 week at a time and just basically say, let's respect the chop. Let's realize there's some risk opening up, and let's just look for the individual sectors and the pockets of momentum in this market that are still exhibiting momentum, because there are still pockets of, stocks, groups of stocks, meme stocks, momentum stocks that are working right now. In fact, we're going to look at a few of them in just a minute. So that's kind of the read there on the S&P. Russell 2000, is mildly starting to relatively outperform here. If you throw in a ratio chart of Russell versus SPY, you can see we're kind of slogging sideways now, trying to turn up. So breadth expansion, small cap participation, that would all be good, encouraging, inflows or new developments here for the market. NASDAQ 100, similar to the S&P 500, looks a little bit better here. You can see it's down, 3 days in a row. It looks a little tired, but it's still above its May peak here. So the Qs actually do look a little bit better. Didn't quite get up to those prior all-time highs, but similar comments. Let's not rule them out. Let's just maybe have some digestion here into summertime trading. So that's the read there. Those are the price action levels on the major markets. Let's take a look here at something I'm excited that I've been working fairly tirelessly to get out. And I wasn't going to debut it or show it today, but I'm going to anyway. So this is a research platform that Trade Risk is going to be debuting specifically for swing traders that are looking for the high octane momentum stocks. So we're calling it Quant Rockets, little tongue in cheek on the name. And this is supposed to be sort of an interactive dashboard hub platform that comes with a strategy, some historical back-tested results, and kind of a signal engine, a framework to track, trade, and monitor the hot stocks that are working in this market. All right. This is something this is kind of part of an internal research engine that we've built automated trading systems with for a decade. But I've just never got the extension out to power a website or to get the front facing to make it accessible to anyone else. It's always been internal to me locally on my computer. And now I've kind of been putting in the effort to make this a little more shareable, I guess, let's call it, right? So at a high level, let's look at some of the things I've got in front of us here. So we've got a what's new or what has changed today table. So there's two stocks that are interesting right now. HIMS is the first one. So we had a status improvement today from neutral to bullish. We're going to look at that. And we did get a new sell signal here in ANET dropping off our list. If I look down here at the kind of master list, I'm only showing the 5 favorites that I've personally selected that I want to talk about. But these are the curated quant rocket picks that I like right now or I'm involved in. Let's take a look at some of these stocks. I talked about a few of them, I think, last week. Let's look at HIMS first. Okay. So if we look up here, HIMS is a stock that's been on our Quant Rockets list since May 1st. All right. So if we go back here to May 1st, this is essentially, what bar is it? This bar right here. So this is where this hit our list. This was essentially a buy signal and entering a list. This is where the momentum signal is firing off, basically saying, hey, pay attention to it. You know, it could be ready to move. And so it's been on our list since May. It had a nice run up and then it's been digesting. And so basically our outlook for HIMS here had been neutral to choppy to pay attention to it in this zone here. It never broke down. And now we're starting to essentially get a fresh, you know, buy signal, let's call it. You could add to a position here. If you weren't involved in it from the start, you could initiate a position. We're not telling you how to trade. We're showing you a model. We're showing you results. We're showing you a track record, but it's the interesting candidates that is up to you to decide on how to execute on. So HIMS, I think, is interesting. I like it. I don't have a position here. I will look at it though, establishing one on Monday. ANET is a sell signal. We don't really need to look at that. ASTS. So this is another one. I talked about this last week. So this came onto our list fairly recently. This was on 6/9. So right in here on this particular day is when it entered our list as a buy signal. I do have a position here. This is the type of stock that is such a aggressive momentum stock. I wouldn't like trading it without having a model or having some stats or having a framework, a workflow to kind of know when to exit, right? So as a discretionary trader, as Evan's speaking here, most of my trading is automated, but if I'm going to take a discretionary trade on a stock like this, I need to have a framework that's going to at least kind of guide me into this trade, right? So I'm involved in this. I do have a position here. I did sell some on Wednesday, taking the position down a little bit, but I'm still involved and it still is quite stretched. I can't advocate getting involved now. It's up 43% from the initial buy point, and that's why I took profit, and we'll just continue to, you know, manage this as I see fit based on price action. Another stock that I am involved in and like is NXT. This is an interesting one because solar stocks have been so obliterated and are terrible performers. NXT is absolutely bucking the trend. There's a good kind of longer term, you know, potential pattern here, and there's a good momentum unlock if this can get over $61. Might get flushed out. Again, it's kind of a tough sea to be swimming in here with NXT. I do have a position. I think our model has, our model's down on this. So we got involved at $60.17, 516. And right now, so we basically have a warning status on it. So this is something that could be on the chopping block as an exit signal soon. When you see a status like this and when you see a very weak signal strength, that's, you know, that's kind of the warning sign. So I'm in it. I'm down on it. I don't know when I got involved in it, probably the $60.17 area. But we'll see how this, you know, kind of plays itself out. So there's a little sneak peek. There are lots of stocks on this list, and that's why I say there are plenty of pockets of momentum that are still working in this environment. I think the indexes are maybe tough. They're tired, but there are story stocks and there are things underneath the hood that are still seeing a good deal of momentum. So, so just keep an eye on that in terms of market, you know, analysis. So that's it. A little bit of a sneak peek here. Didn't mean to turn into a sales pitch, but I think it's pretty valuable. I think it's interesting data. I think it's got some statistical significance, and I think it's a good framework that can help traders, especially new intermediate term traders, to get some guidelines in, to get some structure and a workflow in. And I'm excited to continue to build this out. So that's it for me. Make sure you check out our newsletter if you're not on it, so you can hear more about when this releases, and check out our sponsor IBD. Have a great weekend. Enjoy the good weather, and we'll see you back here next week.